Hi, Mara traders. Just a quick look here at liquidity and using naked delta data and our liquidity combined to give us a good idea of trades going on. Yes, we do need a bit of market direction to help us, but Mara often trades by itself and in some ways is turning into a bit of a meme stock being pushed around by vol compression. Anyway, we've got a couple of different periods of trade here. If we go out to the 2 hours, we can see that we've had a little bit of a build coming into here into the 12th and the 13th, and then we've had a strong build followed by red, which is selling, green, which is buying. I've got a couple of indicators happening here. We can see that it's held pretty tight since this buy at earnings, and that earnings, a lot of that has been hedging, and then a reflection of that just slowly being let out. We can just see the sentiment, the liquidity sentiment, slowly gaining as holding the stock becomes, or hedging the stock has become less valuable, and we've seen it drop down a bit. So let's just go and have a look at where some of those trades were, or a couple of things to note. So here, I've got two sides to here. This is a naked delta 30 matrix, and I've got it set on 0 to 30 DTEs, days to expiry, and I'm looking from the 9th through to the 24th, and we can see this big inflection here in colour. That is the OPEX that we've just seen, and we can see that a whole lot of potentially sold calls were closed out on the 20th, on that dip on the 20th. And we can see that they haven't reopened, not these out of the money calls. So this is out of the money on the right hand side, and in the puts here in the red, out of the money is on the left hand side, closest to the center of our put call ratios. In the money is out here on the outside on both puts here in the red and in calls here in the right. And then we have a delta filter, so we can filter out and have a look at how many of them are in the money. In the money tends to give us a more of an idea of direction, but out of the money gives us a really good idea of positioning for that direction. So one of the things we can see here is today we've had a bit of a build in out of the money puts here, which is reasonably negative, but we can see at the same time we've had a little bit of an increase here in the deep in the money, and that's quite positive. If we have a look through, we can see though that it's strengthening nowhere nearly as quickly as the puts are closing, and so we can see it's dipped down into a lower position. DPI is fairly supportive of the action. It's just bouncing up and down with the price, suggesting market makers are using over-the-counter markets to do their delta hedging of their books. So a couple of things that I just wanted to notice here is there's a couple other things that we can display. We'll just take this filter off. I'm looking here, I'm going to look at column 8, which is just out of the money or just in the money, I think. And I can see here on the 16th, here's the 13th, and here's the 16th. So let's have a look what happened there on the 13th and the 16th. So on the 13th, we got this great big jump up from the 12th to the 13th. And then when we opened on the Monday, on the 16th, it wasn't going to carry on. So there was obviously some political play in there that people were very keen for on the Friday. Then come the Monday, they weren't so happy. And so on the 16th, what do we see? On the 16th, we see this group of out-of-the-money calls here go from 37,000 to 60,000. And it stayed pretty well in that 60. It's gone up to 73, and it closed out Friday the 20th at 64,000 before dropping to 27,000. Now, if we want to actually look at the gamma of those to see what their value was during that period, we can see that when they were open, they had a value of almost 1-to-1, so they had a value of 60,000. Oh, sorry, I'm in the wrong place. They had a 0.1 value there, so they had 6,000. So they were delta of 10, and they went up at one stage on the 18th to a delta, and that's probably because of an IV squeeze that was 3 times that value, and they finished at half that value before being closed out and rising a little bit on Monday and then down a little bit on Tuesday. And so we can see that these were, I can assume, were sold. These were closed on the 13th. They've risen in value. They've closed out on this somewhere between the 13th and the 16th. They've decided that they're of not much value. And then we can see them decline to about 2/3 of their value. And we can see very clearly that we've still got roughly the same number, apart from that very high trading day. On the 8th, we can see that we've got 62 and 64,000. So these people have gained a third of the value of these sold puts during that trade. So it's a successful trade. The other thing that we can quite easily see is we've had slowly diminishing in the number in the money puts, or they've been slowly rolling down into lower deltas, because we actually see that the numbers of them here are quite high, and we can see how that works out if we look at the total number that are in the money. They have slowly rolled down, and we have seen some slowly increasing numbers in the money. So people have been slowly buying this dip, but then we've had this cliff. And this cliff here really shows us that nothing had opened up there if we had a look out of the money, which suggests that traders think that there's no point selling anything at the moment. They've bought a little bit, but not much. Now, all of these things point to quite a positive market that we can look into. So let's have a look at how that plays out. So what we saw here was this period here is we were looking through the 19th into the 20th, and they've bought back a whole lot of those puts from about the 18th, 19th. We can see it starting to cascade down into just slowly descending into quite a tight market here, where a lot of out of the money calls have been closed and in the money puts have been closed, giving us this fuel for a rising market. So let's see if that rising market was tradable. It's quite a difficult one, but it's not hiding in all the normal places. We can see it's washing out here in the irregular liquidity, which is measuring it against the last 15 days. The difficult thing here of the timeline liquidity to pick is that it quite quickly bumps into a ceiling in the shorter timeframes. Actually, in most of the timeframes it does. We might have been able to trade it on a longer time scale. So here on the 10 minutes, you probably could have been safe that before you hit this point here that it was tradable. But if we went back and look at the 3 minutes, the thing that was noticeable about it was that we constantly had some of this green washing through. And it really wasn't until it started to drop back off the cliff, when it had been positions being closed and shorted for a while before it started to rise. So there's definitely in that 15% rise there's quite a good catch. Here's another one. This was this fall that we saw today. We can see the hedging slowly running through the 23rd and coming out into the 24th morning here. And if we wanted to have a look at that just on those 2 days, let's just have a look at the 23rd and the 24th, and we would have seen what it was saying to us. Actually, that's not a very good one. Let's go here and go one more down, and we'll just wipe it off to the 16 days and see if we've got a better look. No, we're not going to get a better look at it. Oh, my mise en place wasn't as good today. Anyway, the mise en place wasn't great. Anyway, we can say, looking back at how liquidity showed us that was a trade, I did do this in my earlier video today, is that we can see that not only we're feeling very confident about it because we've got selling in all 3 of our indicators here that are spreading over different actions within time scales and measuring different amounts of volumes being traded. And we can see that it's selling, and that selling has really kept us in. You probably feel pretty safe to about here when this really starts to green up. And then, look, it's still sold all day, but it's probably not tradable. And here we're looking we might get a bump up. So the thing to note is, if you were day trading, that there was a good day trading opportunity there in Mara.